This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. This is a Wednesday morning. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning, Prashant. Morning, Nigel. Morning. Looks like it's going to be a quiet day. I mean, at least that's what the start is indicating, right? So we'll take it from there. But a lot of big cues to track today.
Overnight, though, no cues at all, right? Absolutely flat kind of markets. And that is not exactly a bad thing because you need a little bit of calm, not an up and up market or a down and down market. We've been more recently in a uptrend. So this was consolidation. So the S&P 500 closed absolutely flat. The Nasdaq was even flatter, if it can be. The 2-year yield on the US Treasury ended again flat. The dollar index sold off a little bit by about 0.3%. So that's a snapshot of what happened out there in the US, which is not very much. Here in India, we had a bit of an up and down day, right? And the trigger was that Bloomberg story, which basically talked about the fact that the government may constitute a committee which at some point may consider changes to the capital gains tax regime for equities, basically stocks. And that triggered a sell-off in the market. It was bought. The sell-off was bought towards the end. But after market hours, we've got the clarification from the IT department, the government basically saying that as of now, there is no proposal to consider an overhaul of the capital gains tax regime. Now, of course, this is as of now. No government will say never, ever, right? But this is what we have. And this is, I think, a pretty clear kind of rebuttal to that story that there is no proposal at stage. This should, in some sense, at the margin, calm nerves if nerves were frayed on the back of that, as the price action yesterday did show. So that is, I think, an important thing to note. What did we see yesterday? I mean, on the Nifty, because of this story, and I think because of general other price action as well, we saw what is called the inside bar. Basically, yesterday the Nifty spent the day inside day before yesterday's price range. The high and the low was basically within the high and the low from the prior day. So it's an inside bar pattern. So yesterday's high of 17,863 and yesterday's low of 17,474 become important levels to watch out for. Near-term consolidation is likely until the point that 17,863, which is the high from yesterday, gets taken out conclusively. So expect, maybe sideways or consolidatory price action until and unless that level is taken out. A break below 17,574, which is the low yesterday, can cause a correction to 17,500 kind of levels. 17,501 is the next kind of support. Bank Nifty did not have a negative daily close. It had a positive daily close yesterday, and that is good news. So one kind of goes with the assumption that the uptrend of the Bank Nifty is intact. As we've been saying, the Bank Nifty is already taken out the golden 61.8% retracement of the entire fall, and the upside level for the Bank Nifty is the 78.6 retracement of the fall. That stands at 42,966, and near-term supports for the Bank Nifty kick in around the 42,036 odd levels. So as the SGX is indicating, it perhaps will be a flat start and we'll pick up from there. No real big global cues to influence price action up or down in any meaningful way, at least as we start the day. Sonia.
Absolutely. And, it seems like, at least for the very near term, this 17,850, 17,900 mark is something that could prove to be a resistance for a market, at least in the near term. Now, in the global markets, although the markets ended flat, the Dow didn't do much overnight. Two pieces of earnings disappointed the street. One, of course, was Netflix, where their revenues fell short of expectations. They've also delayed their password sharing crackdown that was expected to happen. They've delayed it now to July. The other one was Goldman Sachs, where their profits fell almost about 19%. And in fact, Goldman Sachs said that bond trading and the deal making is something that slumped in the first quarter. And it also lost some money on the sale of its assets in the consumer business. So that was not looking good at all. And those two data points are something that, the market was squarely focused on. Today, later in the evening, you have Tesla coming out with their numbers as JP Morgan. As Morgan Stanley will be coming out with numbers as well. So lots of data points will flow through in the next 48 hours for the US markets. For our own markets, yesterday, the markets ended in the red, and foreign investors sold in the cash markets for the second straight day, and the sell figure has been rising by the day. Yesterday, 810 crores is gone from the cash market. So that brings us to the levels where we believe that perhaps this, level on the upside is something that the Nifty could hit resistance on, the 17,850, 17,900 level. A lot of large caps coming out with numbers over the next couple of days. Tomorrow there's HCL Tech, then Friday there's Reliance, and Saturday ICICI Bank. A lot of experts that I had a chat with believe that ICICI Bank could be the star of the show this time around, considering that the Bank Nifty has been assuming leadership and you had good quality earnings from the likes of HDFC Bank. So that's the one to keep your eye out on. Also, a couple of these names like ONGC, Oil India, etc. could be in focus as the government has increased the windfall gains tax on domestic crude production. But more on that later. Those are some local cues to track. In terms of the overall market, it looks like this, range-bound move is something that could continue until we get better earnings, perhaps.
Well, that's right. Sonia, yesterday the tax tweak scare as well as the financial Nifty services expiry, that's the one that put pressure actually. And that's why you did see that the financials and the banking stocks, they didn't participate in yesterday's trading session. In fact, they had a bit of an off day, and that's what led to a 50-point downtick on the Nifty itself. Nifty, it's consolidating, yes, in that 300-point range. On the downside, 17,550. On the upside, 17,850. At some point of time, this range will break, and then maybe we get a decisive move, 200-300 points in either which direction. But for the time being, that range is holding out. But don't just focus on the Nifty. There are plenty of opportunities in the market, and we've been making this point since the start of April. Just take a look at the outperformance you're seeing in the broader markets. Both the mid and the small cap indices, they ended with good gains, and there were plenty of stocks that did do well. And yesterday, it was a day when we saw a bit of a sector rotation because the pharma index came back in style. Now, if you're looking at, the open interest yesterday, it was a little bit lower both on the Nifty as well as on the Nifty Bank. So there was some shedding that we saw. The FI positioning in index futures, it didn't change much, and the long positioning is close to around 37%. Remember, that's moved up big time from around that 9 to 10% odd. Now, the options data, if you're looking at the PCR, it had moved to around 1.2 odd. In the last few days, it's coming back to around 0.8. Remember, the lower end of the range is around 0.7 odd. So we're heading towards the lower end of the range. And that's because call writing has been written in style, 17,700 call, 17,800 call. Both of them yesterday added close to around 70 lakh shares between them. So at higher levels, you're expecting some bit of supply to come in there. And that perfectly tallies in with the 100 DMA. That comes in at around 17,850. So the bears will want to hold on to that level. But since we have seen buying just a couple of sessions ago from around 17,550 and the 50 and 200 DMA is in that vicinity, that's a bit of a support zone that we're looking at. The Nifty Bank needs to perform if the market needs to go up. It had an off day yesterday. Let's see whether it pulls back today. But there was writing that we saw yesterday at 42,500. Good amount of open interest built up out there, and we hit 42,500 and we saw a bit of a U-turn. So getting to the levels on the Nifty Bank, the 100 DMA holds out, which is at around 41,700. You're seeing this uptrend is intact, and you look to buy the Nifty Bank. But there is a bit of resistance that comes in at around 42,600 odd. SGXFP suggesting a bit of a pullback. Not as bad as the start of today. When I came in earlier today, it was suggesting a 40-50 point downtick. So maybe we start off in the red. But the range, I think, we're in for a phase of consolidation till we get bigger earnings like Reliance and ICICI Bank.
All right, that clarification from the government later in the evening, I think that should soothe nerves, absolutely, because that is the one kind of thing which caused all of that volatility yesterday. Well, before we start, let me quickly tell you what is lined up in the first half hour of the show. We get you updates from markets across the globe. Mark Matthews of Bank Julius Baer and Company joins in to discuss the global setup. Later, our research team gets you CNBC TV 18's list of top 10 stocks to watch. At 8:30, we do a fundamental stock analysis. Sanjeev Bhasin of IIFL Securities is going to be with us.
Okay, first up on the equity side, we have a view coming in from Gautam Dugar of Motilal Oswal, who expects the markets to be range-bound with a slight positive bias, given that the foreign investor selling is moderating. He expects modest earnings growth of 15% for the Nifty in Q4, led by financials. He says they are positive on technology after the valuation moderation. However, there's no near-term trigger for the stocks. Over the next few days, he says the best set of earnings could come in from ICICI Bank, and they are very bullish on ICICI Bank at present. They also have turned overweight on consumption in their model portfolio, with continued preference for ITC.
Okay, well, let's get you some money market views as well. Kunal Sodani of Shriram Bank says elevated US bond yields favor dollar bulls and help limit the downside for the pair. With Fed speakers being hawkish, markets expect the Fed to raise its policy rate again in May. According to Kunal, the dollar index is finding resistance at the 102.4 levels, while 100.8 now acts as a support. And for the rupee, 81.85 to a dollar acts as a support, while 82.3 to a dollar is a resistance.
All right, on the bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond traded in a narrow range of 7.19 to 7.24%. The CPI data was in line with market expectations. Global data was slightly weak, but the US yields jumped higher on strong results by banks, thus allaying fears of the banking sector stability. He expects the bond market to be range-bound as the coming week is light on data. Neeraj expects the 10-year benchmark yield to trade in a range of 7.18 to 7.25%.
Well, there are a lot of stock-specific action that we're tracking for you, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Titan, Reliance Industries, Pilgrim Pharma, Zydus Life, eClerx Services, Bank of India, and Som Distilleries. They are stocks that will be reacting to positive news flow. On the flip side, you have ONGC, ICICI Lombard, and Tata Coffee that will be reacting to negative news flow overnight.